All right. What's up, traders? What's up, tycoons? Super excited for today's video. We're going to take a look at CELO, CELO. All right, breaking it down on the daily chart as always. And what we're going to do is go over this possible five-wave structure that's forming right now, and really go over how we come up with these bullish price targets, why we have these three levels here specifically. They're very important. Okay, as well as take a look at the RSI to help us understand any future price movement. So make sure to smash the like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. We're looking to see if we can get this five-wave structure. Okay, this is a bullish five-wave count. All right, and you come up with your bullish price targets, using the Fibonacci, as well as these three levels right here using the Fibonacci's. So specifically the 38.2, the 50%, and the 61.8% levels, those are the three most common and well-respected retracement levels. The reason you use these is nothing moves in a straight line up or in a straight line down. Rather, you get a move up, retracement, continuation of the trend. That's how you spot trend continuation. And that's what we got right here. When we connected our swing low to our swing high, you see we moved up, we retraced to the 50% retracement level, and then we continued and hit our wave 3 extension up here at 0.877. All right. Now, if you break through these levels, right? So if you break through those levels, then that could indicate you potentially get a reversal. So you use it to spot that trend continuation with a retracement and continuation. But if you move up, retrace, consolidate a little, and break through those retracement levels, you could potentially spot a reversal to the downside. So, if you take a look again, we came up, retraced to our 50%, continued the trend, extended to the wave 3 targets. If we do get any type of a pullback, okay, we want to hold as of now above 0.718, 0.751, and 0.785. Those are going to be your three major retracement levels, and we could be bearish below those and possibly come down and break through those and retest some of our previous lows. Now, if we continue to hold above those, that's where we have the chance to come up and hit our bullish price targets around 1.047 as well as 1.142. Now, what we did get here recently was a break of this trend line. Okay, so we've had a long-term trend line here that we just recently broke. All right, and we're starting to see volume pick up a little bit. So this is good, right? We're starting to see volume supporting this uptrend, meaning, this uptrend could be a strong breakout and we could hit these bullish price targets rather than getting a look above and fail. Now, look above and fail is going to be pretty bearish. So if we end up breaking our retracement levels and not finding support along this trend line, we could end up getting a big move to the downside. So you do need to be prepared for that and be cautious of that. Another reason why I'm saying that and you want to be cautious of those levels is because we do actually have a rising wedge, right? So if we hide this trend line real quick, all right, and we go ahead and take a look here, we are forming a little bit of a rising wedge, right? Indicated by these two trend lines. So, we're consolidating in here. If we happen to break this downwards trend line, which we really haven't tested it, right? The trend line began over here, and we've done a really good job of holding the retracement levels and staying above those trend lines. But if for some reason we do happen to come through and break this level, okay, typically you're going to see in a perfect world scenario, a rising wedge would take you down towards the lows of where the pattern began. So that could take it anywhere from the 0.4 to 0.5 region. Now, another thing we do need to be cautious of is the bearish divergence here. Now, if you're not familiar with that term, I'll go ahead and explain it to you guys very simply. So take a look how we have a high right here. Okay, we have a higher high. We have a higher high. So clearly the token was making higher highs and is in an uptrend, right? Well, the RSI should be reflecting that and for the most part should follow the price of the token. Sometimes you get divergences though. So each time where we're making higher highs, we're actually making a high, a lower high, and a lower high here on our relative strength index. So we're losing relative strength as the price of the token is going higher. That's a term known as bearish divergence and could be an indicator we see some type of bearish activity. Now, again, that doesn't mean we have to break through, okay, this pattern and for this pattern to play out. It just means that if we do get some type of bearish activity, it wouldn't necessarily come as a surprise. And we know the three major levels that we need to hold as support for us to continue higher. Otherwise, we could be bearish below that 0.718. Now, if you're bullish on this, what you want to see is you want to see us break out past this bearish divergence trend line, all right, and really flip it to support. It can break out and pull back, but you want to see it stay above that level and trend in an upwards direction. That could indicate, we're breaking the bearish divergence. and possibly looking to get some more bullish momentum and really get another rally behind us. So hopefully you enjoyed this video. Remember, it's not financial advice. We went over the bullish scenario, some of our bullish price targets, and we also covered some of the bearish scenario as well. So that way you guys are properly prepared, and either way it turns out, you can understand the price action a little bit more. And if you made it this far in the video, I really appreciate you. You're probably going to enjoy one of these next two videos as well. So make sure to click on one of those.